Penny stocks are shares of small companies that trade for less than $5 per share. These companies are typically less established and have smaller market capitalizations than larger companies that trade on major exchanges like the NYSE or NASDAQ. Penny stocks are often found on over-the-counter markets or on smaller exchanges. Pros of investing in penny stocks. The main advantage of investing in penny stocks is the potential for high returns. Because these companies are small and less established, they may be more likely to experience rapid growth if they are successful. This can lead to significant gains for investors who bought shares early on. Additionally, penny stocks can be a way to diversify your portfolio if you already own larger, more established stocks. Cons of investing in penny stocks. The main disadvantage of investing in penny stocks is the high level of risk. Because these companies are small and less established, they are more likely to fail than larger, more established companies. Additionally, penny stocks can be subject to manipulation and fraud, which can make it difficult for investors to make informed decisions. Finally, penny stocks can be illiquid, meaning there may be a limited number of buyers and sellers for these stocks. Important considerations. If you decide to invest in penny stocks, there are some important considerations to keep in mind. First, it's important to do your research and only invest in companies that you believe have a strong chance of success. Second, you should be prepared for a high level of volatility and risk. Finally, you should only invest money that you can afford to lose, as penny stocks are not suitable for everyone. Thanks, and do not forget to subscribe to see more videos.